in a moment you're going to see my chart. In fact, let me test it to make sure that it happens because sometimes it's slow. Okay, this time it's doing it okay. Okay, it has different resolutions. I'm not sure if I want to go to a higher resolution when have everything crash on me, but you can also open the charts yourself. In fact, that would be a good idea to follow along with your own chart, so you can interact with it and so on. So I will not use, because I see it has different resolutions, but if I click on it, last time we did it, everything crashed. So let me go live. Right, so you should be able to see my chart. You can click on it to make it bigger. Then there is also the window, the voice channel chat. And if you don't feel like talking, you can always write stuff there, or you can ask your questions or whatever. Sometimes we do show graphs here, so keep it open because it's going to be useful. But you can everybody should be muted in the sense that you can talk at any time without my permission. Um, I think at least it is like that. But if you, of course, if you have a background noise, you want to mute yourself so you don't bother the other people. But yeah, ask question at any time. You can do it writing because maybe somebody is in a cafe or something and you don't want to disturb the people around you or whatever. But I rather hear your voice because it's a way of interacting with each other. Um, yeah, yeah, we can talk about the market. Probably we can leave it at the end after the presentation, but I can we can wait another couple of minutes if anybody, any straggler comes in, so we can talk about it. Yeah, what I think I just posted on it. I think a lot of the giants that usually do crazy things with their crypto as the bull market comes in, they are moving to MSTR, to do the same thing. I mean, it's great to see bullish things. The problem is when everything crashes on you, right? So right now, as you can see from our models, it's not supported, right? There is no support for this thing. It's you see when you see a straight line like that, that is this type of graph that is called log linear, that is an exponential. So it's going up as an exponential. We can even calculate what that slope is and come up with a percentage per day, something like that. I think it's unsustainable because what happened to exponentials. I mean, if that graph continues like that, you can make a ton of money, right? I do have MicroStrategy myself, small amounts, but it looks like there will be a correction. So I don't see what makes that thing going beside people going crazy and doing some speculation. So I don't know what is the right play there. maybe buying some puts, selling some puts and hoping for some kind of correction. Yeah, at a certain point, I want to have like a channel. What do you think is a good approach? We should have like an option channel or something. Anyway, the moment I'm ready to start. Yeah, right. Yeah, let's talk maybe after we do this introduction, and then we can keep talking and discussing different things. Yeah, we should start to get ready, but as I show you a different indicator, we can talk a little bit about the market. Everything looks so bullish. It looks like almost like we are ready for a early bull market. Last was telling a few days ago, it looks very much like it looked like 4 years ago. If you look exactly where we were, we had like a early bull market. So bull market usually starts in November. Right, okay, we are close to November, but more like mid of November. And right now we are here, so it's close enough. But yeah, it's very similar to what happened then. The problem it's this, don't have liquidity there. It is what we had every single time. So I don't know how to interpret this. It needs to be understood better. It's worrisome because I think if we start a bull market without liquidity, something can go wrong. Hopefully it doesn't kill the bull market or doesn't make it be later. But we should continue to monitor, right? I think probably it's a good idea to start to think like the bull market will start. It's possible that whoever is providing liquidity is waiting for the elections to be settled. Because even if they are in other countries, and like a large quantity of other cash coming from other countries, they are for sure looking at the U.S. elections, right? So even if in general say that politics and election stuff like that should not influence Bitcoin locally, we do, but let's see. Anyway, so let's start this thing. All right, let's start with our first indicator. So first of all, welcome everybody, all the new people. Thank you for your support. I hope you enjoy the community. Going to hide this one and going to show this one. All right. So this is our first indicator that everybody should have, independently of their level. It's called the adaptive power law indicator. And what it does differently from the other indicators, it updates the slope every day. So basically, it's using all the information up to that point, and then it calculates the slope. So this is why you didn't see a straight line, because it's basically the slope, the overall slope, right? Up to that point, using all the information up to that point. So when it's close to a bubble, the value for the slope will be slightly different than when we are coming to the bottom. And this value is going to be more and more consistent with time, right? Because there is more data, so it's going to be influenced less by recent data. It's more like closer and closer to a general trend. But as you go back in the past, you can see that it gets a little bit more influenced by local events. It's kind of cool for a few reasons. First of all, because you can see that notwithstanding local data, like probably the biggest deformations are really at the start, because we didn't have a lot of data. So the power law, it's not that the power law didn't exist. We think they still existed because it's something connected with the real power law is connected. We have more and more evidence now that is connected to the price of production of Bitcoin. Then, there are the bubbles on top of that process. Then we draw a line that represents some kind of a compromise. It's almost like we have two signals. There is the bubbles and there is the general trend. And the power law in the middle is a compromise between the two. So, but this the cool thing about this approach is that allows us to look for local trends. That is the main application. So one thing that we show all the time is if you go and look at basically because it, for if a power law idea is true, it means that Bitcoin spends a lot of time at doing power law things, right? And even if it changes lane, if you go from one lane to another, it's still the path is still parallel to the general trend. See, all these are deviations from the trend, percentage deviation. It doesn't really matter because I mean it matters price wise, etc. But in terms of behavior, it's still the power law, right? Because the most important parameter is the slope. So basically, that gives us the rate at which Bitcoin changes relatively to time. So it's kind of interesting to see that it spends a lot of time. You see here, like this, like this, like this, like this. So it spends a lot of time doing power law things, that is basically moving along these parallel lines. It's kind of interesting, and doing it in this way makes it even more clear because it adapts a little bit to the local behavior here, um, and so it shows creates kind of support. Maybe this is a resistance, right? Resistance level. So instead of somebody drawing this support resistance line by hand, you're doing it automatically and with math. So there is no debate. It's much less arbitrary than somebody doing this by hand. So it's kind of cool, right, to see these levels. And then it looks like whenever Bitcoin changes, it changes very rapidly. And then it goes to the next support or resistance level, right? So you can use that for all kind of things. You can uh, use it to buy the dips. So if you like trading, maybe you can come up with a strategy around that. Right now, by the way, uh, and eventually, we will have we will share this with the group. I'm making quite a bit of money by basically DCAing down using futures. So I have these future positions open and very, very safe because we are using the power law. Basically, we are saying if I am here, let's say I am anywhere right here, and I'm thinking the price is going down, it cannot go. I'm going to use, of course, right? It's not sure 100%, but it's pretty solid bet. But we are now going down the support line. The support line, by the way, turned out to be, we think, is really where the power law is. It is basically the cost of production. And we had some discussions with miners and saying, they say, yeah, it's true. When you reach a certain level, it's not necessarily they look at the power law, but it's something that it's part of the system. And we reach these levels, and we are losing money if we sell Bitcoin. Many of these companies borrow money against the machines, borrow money against their facilities, whatever, uh, and they can pay everything, all the expenses, all the things they need to pay using this borrow money, and then we wait for Bitcoin to turn around, and it turns out to be this line, this support line. Um, this is how Bitcoin works. It's probably where the real power law is. So you can use it as a floor. Then you can divide, you know, wherever you are in a bunch of levels. You can optimize these. And every time you go down, you double down, right? Because that brings you, when you take the average of a process like that, um, you don't get the bottom because differently from getting the general bottom of a power law, but how these cycles. It's not easy to get to the bottoms of anything, right? Doing it in this way, where you double down, so you buy more and more as you go down, you average down, right? So it's a form of DCA. There is also a name for this process. It's called martingale, where you double, double, double. It doesn't have to be double; it's some kind of multiplying factor. But basically, you have enough. Whatever you have in your account, you're using as a collateral, where you can afford to go basically all the way down to the support level, and then you can kind of head calculate what the size of these trades are when the price goes up, because even when we go up, there will be still oscillations. And my chart, I can share it with you, but we can discuss it maybe in a special meeting for that. But I'm going up, 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 up. I didn't have a one single loss because there is nothing to lose, right? You're just betting on Bitcoin eventually to going up. So it's just some time you sit on your trades, but not long. Also because it's always adjusting itself, right? So you don't have to. You can buy here, and then if it goes down, you don't have to get out here where you bought. You can get out somewhere. So you get out when you reach a certain percentage. I made like $8,000 basically playing with only $12,000. This is like less than a month and a half. So I'm thinking, in fact, to play with much larger sums of money, something that I'm testing. So it's kind of a good idea to have levels like these where, particularly if there are things where you can identify, like Bitcoin those moves along this line for several weeks, sometimes months. So it's one of the useful things about this particular power law. Um, so these are just levels, percentage levels, all the way to where basically we have a bottom. By the way, I show here how long the power law has been true since it would. I talk about power laws all the way to 2013. This particular power law of price versus time was discovered in 2018, and this purple line shows how long has been right since it was discovered. It's kind of interesting to see. It's a big chunk of Bitcoin history, like basically right now it's what, almost half, because it's a little bit more, maybe a little less than half of the history of Bitcoin, because it's 6 years. Anyway, so what else is done with these? So first of all, we projected in the future, uh, this value here, it's the projected 500. So basically where the line ends. So this where this curve ends. What we really think, we are going to be close to 200,000 when we reach the top. Is what is the projected. We have about 1 year of time before we reach the top. So it doesn't look too much. It's doable, right? But when you look at in linear terms, it looks much more daunting to go all the way there. See, notice where we are right now with the previous bubble, right? So, and we should probably go a little bit slower because this bubble tends to decay, but we will see. We'll see what happens. I'm not sure 100% the bull run yet started. It looks like very bullish, but we will see. Uh, Differently from the support line, it seems to be very, very consistent. See, we have a support line that is can calculate it in different way. It could be a percentage from the trend, like 60% down. You can do it using just a small fractions of the entire data set, like I don't remember if it is 0.3 quantile or something like that. You can use ransack. So there are many different methods where you say, I'm going to select these data points, and we look like if we are going through, a straight line basically in a log graph, and that is my support. It's really shocking when you see these points and you take off everything else and say, how in the heck there can be a line like that with these huge big gaps, like sometimes, the last 2 years, because basically the gaps are the bubbles. It's really shocking when you see that graph. You see that something weird is going on, that is very unique to Bitcoin. Anyway, notice what happened, right? We went there. We are not supposed to be there. Went there probably because of the ETFs. We touched this blue line, and then we came back, and now just recently we are going up again. And that happens before, you see here, and we went slightly above, we corrected, and so on. So the idea is that usually we stay at the bottom for 2 years, we go up 1 year, and then we come down 1 year. So it's a very simple story. We try to keep the story of a cycle simple, because people make it too complicated, and it's nice to understand it in a simple fashion because it's less confusing. So the other thing that in fact to help with that, we create this what we call the full model. So the full model takes in consideration all these things. You have a general trend of a power law, then you have this bottom, then we have also the decay of the peaks over time. Even that seemed to be regular. Like if you put all the peaks of a power law, so there is some confusion about that, right? In one end, the power law theory of the power law itself, not the theory, because the theory includes the bubble, right? So the difference between the model and the theory is that the just a second, somebody's calling me on Facebook. It's very annoying. I need to turn it off. I don't know why somebody's calling. Okay, it's stopped. Anyway, so in one end, so it goes like this, right? The model itself says there are no bubbles because basically the bubble cancel out. We spend more or less the same time above and below, and so the bubble cancel. Right? In fact, this is why when we do this regression analysis, we get the result that the line describe 95% of the data. It will not be possible with this huge big bubble if basically the didn't cancel. So in one end, at the first level, we are saying the power law says there are no bubbles in this, but you will have to be blind not to see them, right? So they do exist. So from a statistical point of view, you can make that claim that they don't exist. In fact, if you are a long-term holder, and if you are a hodler and you don't care about playing the cycles or whatever, using this volatility during the cycle, then you don't even care. You should not care. You should not be excited when there is a bull run. Besides, I don't know, and if you are a masochist because you're going to see the price going up 3 times, 4 times, whatever it is, and then seeing crashing it. And sure, some people get panicked by that, and you will say, I don't care because all what they care is hodling. At the same time, it's frustrating, right, to see the price going up 3 times and everybody celebrating here at the top and then it crashes, right? But if you play what basically we have a terminology, we call it riding the waves. If you ride the waves like we want to do, you can benefit for that, right? You can do both. You can keep the majority of Bitcoin long term, hodling, but also use some of this volatility at your advantage, which is, I guess, why you are here in this in this group, because in a way or another you want to use that information. How do you do it? If it is about selling Bitcoin and rebuying at the bottom, if it is
maybe using options or different things. It's up to you. By the way, I heard a video of British Hodl where was attacking me to propose this idea that we need to do something at the top, saying exactly the same thing. The only difference was, oh, you should do options instead, right, of selling your Bitcoin. But even say you should sell your Bitcoin to actually buying the, to finance whatever option action you're doing. So it's so hypocritical. It's ridiculous. All of a sudden, he's okay with it after attacking me and saying, "Oh, he wants attention." That is the problem. But anyway, so the idea is that this line then help us to do that, right? Because you can do sophisticated things. This is why one of the things that sometimes I argue with other people that are doing this kind of analysis, and they do all these fancy things. They create some fancy model uh, where, for example, because there are irregularity in the cycles, right, or not, they are not perfect. Um, they are trying to compensate with that using some kind of a function. There is no point because everything that is, stochastic like Bitcoin is going to have some uncertainties, right? These peaks are never going to happen exactly where we say they are going. It's more a question of areas, right? If there is an area where they can happen, where you always have plus minus something, right? So the reason why we're using here a formula, because this white line, it's a formula. It's not trying to fit anything. It's trying to predict. So it's a formula where I introduce basically some kind of a sine wave, and the sine wave is exactly 4 years. And the reason why it's being kind of honest, say, I think that these patterns repeat every 4 years, so I'm sticking with it, and I can attribute any difference. This one didn't happen exactly at the top of it wave with noise, but it be always some little uncertainty. The important thing that we identify the area, within few months, 1 or 2 months, right? But it's more than enough for what we are trying to do. Now, there are other ways where we can pinpoint better, but the first level is to try to say, okay, what is a general area where these events like the bubbles happen? And this wave is doing pretty good job. And again, differently from other analysts, I don't include the first bubble. One could, again, for example, I had this discussion online with a guy, I think his name is Leo, whatever, is doing some manipulation to this wave where he includes also the first one. It's actually relatively clever approach, but it's again adding one more complication, adding one more function. More things you're adding, more likely is that you are fitting noise instead of signal, right? Right now, we don't know if this bubble should be included or no, right? Okay, what about this one? Should we include also these little bubbles here, right? It's a little silly. The reason why I exclude is because you see how these triangles are pointing out to the halving. These three bubbles are happening after the halving, and this one is not. But it's already a reason, a valid reason to not include it. Also notice there are 4 years between the bubbles. This one, it's about 2 years. So it looks like a odd one. And when you have something in a sequence that is odd, you can exclude it, but it's a valid thing to do in science. You can exclude outliers. This looks like an outline. But the problem, is that we only have 3 events. So everything we project in the future in terms of these bubbles to continue and to exist and to behave in the same way, it's based on 3 data points, right? So it needs to be taken always with a grain of salt. And this is what I always do, right? I never try, because I try to be as scientific and as coherent as possible. everything I'm telling you is given all the information which we have right now, given that Bitcoin has been very reliable and very consistent, if it continues to be consistent, then this is what to expect, right? And I think it's the best approach we have, differently from anything else, because anything else will always base on some kind of feelings, right? So people like even British Odo, he was talking about, oh, because of course he wanted to avoid to give any credit at all to the work I'm doing. He will say something, oh, when you feel that you had enough, right? That when the price will reach certain values that he didn't exactly say like that, but kind of, right? He was saying, when you think or you feel that we reach a price that you're okay with, then you can sell some and, and sell some put options or whatever. But yeah, it's all based on feelings, okay? Because how do you know it is 200 versus 180 versus 300 or 500? Unless you have a tool like this that bases everything on observed patterns, even the decay. The reason why we're using these sites is all based on the measure decay. You project it in the future. You say, if this decay continues, then we should see this and this other. This, by the way, it's a conservative measure, and it's not what we are going to rely. Again, there are people that are trying to dismiss or put down, our approach. I heard Plan B making fun of that, like, oh, when first of all, he's saying that we're selling on in February. We never mentioned February. I don't know where he comes up with February, unless he thinks we are reaching in February, we are reaching 200,000. So this is when we are going to sell. We never say when we reach 200,000 sell. Absolutely not. You never heard me say that. I say you should use all the information from all the indicators and come up with very complete picture of what is going on. We are monitoring everything moment by moment and comparing with past pattern, because that is the most rational way of doing it. But we don't rely 100% on past patterns, right? If something is different, we will be the first one to identify it. So everybody that criticizes this approach, they don't ever hear my videos. They don't understand what I'm saying. It's very, very clear, the message we I'm giving. So this is all based on the past patterns, that is right now our best understanding of what it could happen, right? But we are still keeping our eyes open. It's like driving, right? You have the chart or the GPS tells you what is going on, but if you see some, you go straight and you continue to move, but if you see the traffic stopped and all the cars, or maybe there is an accident, you don't say, hey, according to my GPS. Sometimes GPS tells you about crashes, etc., but not always, right? Hey, the chart says, the map says I can continue, right? That is the path. Let me go through this accident, right? And fly over the cars. I mean, that is stupid, right? Nobody does that. It's exactly the same thing, right? You can look at it. It's like GPS, right? It's telling you this is what is supposed to happen, but you keep your eyes open, right? So this is the usefulness of doing this projection, because given that we have a formula for when the tops are going to be, or what we did to create this, because believe me, everybody else, including Plan B model or whatever, but you know what I'm thinking about Plan B, it's a fake model based on fake correlation between S2F and price. But even some people are impressed because there are these jumps at the halving, and they seem to kind of tag the beginning of a cycle, right? If you're using the halving as the beginning of a cycle, we don't do that. Our cycles are measured from top to top. We don't. We are aware of it, of this event, but we don't make a big deal about the halving. It's a convention, what you could describe everything from the halving, but we like top to top. But basically what Plan B does is nothing special. You use It does it in a programmatic way because it's using issuance to the mark when this event happens, but you can put a little triangle there and it will be exactly the same. There is no added value in making your model jump, right? Because what that even means, nothing. It's I don't know why people like that model. It's so absurd. But anyway, so it's best actually to draw something like this. I did it even better where I can actually have this being exponential. In fact, at a certain point, we could do it where we make this curve more like similar to the underlying curve, which is basically like an exponential. When during these bubbles, we are very much exponential, at least for some time, we became exponential. But again, it's not really the purpose, right? If we can roughly say when the bull market starts, that is all what is needed. It's just like a landmark, you're landmarking all the different important points in the cycle. And it's a not honest way of doing it because if you try to overfit it, and trying to make it look more and more as the things are happening, you're overfitting noise, and it's almost like cheating at a certain point. It doesn't tell us anything about the future. If you keep it simple, and basically we kind of aligned the first peak to, the peak of these waves to the first one, then everything follows. Just by just keeping everything for years, for years, and for years. It is a simple way of doing it, but also an honest way of doing it. Anyway, yeah, this is what this white line is about. It's what is called the full model. If you have only this indicator, first of all, I do suggest you to get the other ones because, like everybody knows, it's only $20 to get all the other indicators. Right now, we have 8 of them. I'm adding more. In fact, in the next few days, I'm going to try to approve I made a couple of ones with one is like a quantile, similar to this one. It's because I don't think there are other people that are doing this quantile stuff that are cool, but they are using all the data up to today. That one can do too, but I think it's more useful to do it in an adaptive way because that is the entire idea, right? You use the information up to today. So we have an adaptive quantile power law graph, and we have a Bayesian one using Bayesian analysis. That is another way of doing updates based on only the information you have available. It's actually the most robust. So I'm going to post this too soon. So at that point, you will have 10 indicators that you can use at any point. And the price is never going to go up. So $20, I think, is an amazing deal for all these indicators. But if you have only this one, because I don't know, maybe you're a student in some poor country or whatever, this is one of the reasons why we allow everybody to join in for basically $5. My suggestion is if you want to identify certain places in the chart, you could look at the intersection between the price, right? The price here is white. You can use bars, you can change these to bars, right? You don't have to, or candles, right? You don't have to use a white line. You can look at when the candles cross the white line, right? So it crosses up the first time. It's kind of an alert that something is going to happen. You're going to have a peak. This was, in our theory, this was an early peak. And we can discuss what happens when you have things like this, right? Because one thing is looking everything in retrospective and say, oh, yeah, of course, this was first peak, it was not the real peak, this was the real peak, according to our approach, right? And the other one is when you are there and you don't know what to do and you don't know the future, are the cycles broken? If they happen a little, early this time, they are not lasting exactly the same amount, etc. Right? All this will have been very reasonable feelings to have. See, because unfortunately, differently from support that is so consistent, so real, that it's so easy to identify in a sense. We don't have anything like that, right? You can draw lines that are lines where very likely if you're above that line, the price is going to be hot, too hot, right? Where you're expecting a crash. But that is all, they don't identify precisely the top. It's good enough, because it doesn't, it's not about identify precisely the top. It's about, again, coming up with areas where very likely the price is um, is overbought, people are going crazy and they're thinking the price is going up forever and they continue to buy and then it crashes on them, right? So we don't want to be that people. This is what we're trying to do. And the idea is that you're selling a little bit of your Bitcoin to buy back at the bottom, or you're doing options or whatever you want to do to lock some of these gains, basically. That is the idea. It's up to you what you want to do, but the indicators tell you when. So you can go all by deviations, right? So the deviations here will be high enough. And we have the other indicators that are oscillators that are telling us we are too far away from the general trend where I should be careful, right? So, but how will you handle the fact that it's not happening at the right time of cycle? Because we are very, in our philosophy, we are very, very aware of the timing. So we combine everything. We combine deviations, timing, liquidity, all the things we have available, right? But let's say you don't have that because you don't have the other indicators. You can go all by deviations, and then because we are above this red line, but at the same time because from the white line, it's not the right moment in the cycle. You could decide maybe you sell a little bit, but you sell a little bit less than you will have sold if everything converge, even the timing converge. So just in case we are wrong about the cycles being so regular. So this is how you will handle, right? You try to understand and do things always in real time, always with awareness. That is also a good thing about being in a group like this because we are having all our meetings on Tuesday, and in the chat, etc., in the general channel. We are going to help each other, right? We're going when we are in a situation like this, as they happen, like even now, right? Is this the start of the bull market? We are discussing it, and it's nice to have many brains instead of one brain, right? We are going to support. That is the entire idea of having a community. We are going to support each other and help each other, right? Maybe we are all wrong together, but at least we do it as a group, And you don't have to follow what the group says. It's just one more resource, right? So the general idea is that you probably want to, because we're for some reason these peaks. So my interpretation is that we did have two peaks. Where real one is this one because it happened where it's supposed to be. Also, this one aligns. If you look at the decay of the peaks, this one is the one that aligns. This doesn't align. So there are a lot of signs saying this was some kind of push. It went too far because of the liquidity created by COVID, and then the price corrected, right? But you will not have been wrong by selling something here, right? Now it's very much more difficult to do this catch, but algorithm that I told you actually will have made money here because you will have bought, then sold back, and so you will have because it's in addition, right? I'm using futures. I don't sell my Bitcoin when I do that. I just borrow Bitcoin as futures. Then I buy them and sell using my Bitcoin as a collateral. But yeah, doing a, but you need a bot to do that because it's very difficult doing it by hand. But beside that, you will have been okay because eventually the price anyway continued to go down, right? Um, yeah, so you want to keep both. And in terms of timing, I will suggest to check when the price crosses the first time above it white line, and then when it comes back. So that could be a good place where how to identify these tops, right? And I was telling you before, the reason why you probably want to sell a little bit in a place like this when it's out of place is because it's always possible that if there is a real peak where it's supposed to be, the real peak is much higher, right? Because this one was similar, right, similar height. Maybe this was actually a little bit higher, but it could have been much, much higher, right? And you will have lost an opportunity. So we don't have a precise formula of how to handle that. Maybe we should come up with it. But my idea will be try to use both. And if you see that there is an early peak, it doesn't happen when it's supposed to happen, then take some action, but consider the periodicity of these events. And so maybe act accordingly, right? So don't do what you will have done here because here everything aligns, right? The deviation, the timing, and everything comes. Okay, so this is all about this particular indicator. I'm going to see if anybody has questions about it. So this is a moment to ask any questions.
Hey, Gio, I do.
Yeah, go ahead.
I'm new to the group. Thanks for having me. I appreciate watching all your stuff and learning about the power law. I have a couple questions. First one is I have the bundle and I pulled up the first indicator we've been talking about here, trying to follow along. And on my trading view, it shows up very different than yours. Like you have a white line, mine looks like a blue black. It looks very different. So I'm not sure if I have the right one, or did you make corrections on your side that just aren't part of what automatically get put onto a trading view like mine?
Can you take a snapshot and put it in the chat window so I see how it looks like?
Yeah. Let me figure out how to do that. Let me ask.
When you have a chance. When you have a chance.
Yeah, that would be awesome.
Now we did a video that I always link when people come in, and you can find it just scrolling in the TV sign up channel. I repeat basically the same message, and I have always a link. And my son made a series of videos, like four or five of them, and
Yep.
one of them tells you how to set up everything. One of the things we suggest is to have this black background because some of it, like for example, if you have a white background and there is a white line, you will not be able to see it, you know. So this you can always change the colors. Yeah.
Yeah, I haven't had a chance to look through those yet, so I figured I'd ask, but I figure the answers are probably there. The other question I have for you, the line goes through here is the full model, the white line, correct? You call it the full model?
Yeah.
Okay. And then question for you. One of the things you said from the current price, if we look towards the dotted line, right? Yeah, you had made a comment that, okay, when the price comes down near that line, that's a good time to double down, right? Maybe buy more, right? Now, we're not there right now. So do we think that's going to be an opportunity to wait, or is it just if it does happen, then we know it's unbelievable? Like, how do we know when to add more if it doesn't make it to that line? Because I look back at the last bull run, and it looks like the first bump up, it never got to that line, right? Until it came down and then went back up for the double top.
You mean here? You mean at the top here?
Correct. Yeah, it seemed like it was above that white line the whole time, and then it dipped, and then it did a double top there.
Yeah, I made a comment to it. Yeah, go ahead. Finish your question, and then I will answer. Yeah, go ahead, please.
Yeah, so like where we are now, right? We're not on that dotted line because obviously that's the best place to buy. But if you want to add more to your position, how do we use these to decide when to do that, right? Is it just, hey, when you get the money, throw it in, or there's this indicator or any indicators that, hey, there's a little helpful idea on when to do that?
Yeah. So what I was commenting in general is that with the algo I'm using, that is automated, and I'm basically it's through a company that I'm working with. At a certain point, I want to make it available because it's going to be an amazing tool for people to use because it basically multiplies your money by not selling your Bitcoin. Because that is one of the problems that we have as Bitcoiners. There are long period of time where we are sitting on our Bitcoin and nothing happens, right? This algo is really cool. I mean, I could reproduce it myself. Probably it's just that the company is creating their own platform to trade it. Not to trade it, right? You will still use like an exchange or whatever, unfortunately. But put a little bit of your coins there when this algo is going to be available. Right now I'm using just like $12,000. It is a fraction, of my Bitcoins. And it allows me to get in and out of this position because you can see logically what you will do if you have futures. You go down, you start to buy, you will never get to the bottom, but if you buy down in the way I described, where every time you cross, let's say, one of these lines, you buy more and more, like maybe you double down, that averaging will bring you as closer as possible to the bottom. And then when you go up, because maybe your mean is here, if you go up about a few percent relatively to your mean, you sell, right? And you do it this over and over. So it's basically a way of using the volatility that Bitcoin has left, that is a lot of volatility. So you can actually make consistent gains using this approach. But unfortunately, it's something that maybe somebody that looks at a chart every single day, you could be able to do it. For example, you could say, every time if we go down and you could use even finer lines, right? This is why I put all these lines here. I don't know if there is an interactive way of adding more lines, but you could do it by hand or whatever, right? But this line are supposed to represent 10%, so it's a big change, but maybe you could do something in between. Every time we change and we go to a next level, you want to, if you do future, let's say, you want to buy, right? Using futures. I don't know if you play with future, right? I do. The
Yeah,
problem
how do
with
you
future
use on the
yeah,
future side? I'm very familiar with calls and puts, right? More on the stock side, right? So the
yeah,
future side on crypto, is it very similar?
yeah. The futures basically it's an instrument, right? Based on your so you in Bybit. The only problem with these is that a lot of the Americans have limitations, unless guys. At a certain point, I will actually post it somewhere. I don't think it's illegal. It's just like a tip. Even America can do it because you can buy one of these. You can get one of these electronic digital citizenships, and there is like a place. I was at a conference. Somebody told me, that you can do this, and I didn't know. But there is like a way of getting digital citizenship, and you can look it up. There are several countries that they do that, and then they give you some numbers, some data that you can use to sign up for Binance, for Bybit. You will have to use, VPN because Bybit or Binance, like international Binance, right, will tell you are basically in a third world country. Says in this country, we detected that you are from United States, and we don't do business with United States, Zimbabwe, North Korea. Like if United States is a third world country from a crypto point of view, because we don't, right? Unless they change the regulation. So there are ways to go around. Maybe we can write it in a channel, some suggestions. But then, you're taking a little bit of risk because you're putting some coins on the exchange. Again, do it proportionally. Don't do crazy things. Try always to protect yourself. But if you take the risk of doing that, I think something like Binance or Bybit, they are pretty relatively solid exchanges at this particular point. again, don't expose too much yourself. And then, you could do that where when you go here and you will have to look at the chart every single day. You borrow. It's basically the advantage of using futures is that it's a contract, right? So it's kind of like leverage. So you leverage 2 pair, right? No, don't do it with 10 pair, 20 pair, 100 pair. You will get killed if you do that. But 2 pair, and in particular in this way, again, we have an algo to do that. But one thing you can do is say, listen, how many levels I have up until I reach the bottom, right? Maybe 2. Okay, so you're dividing how much collateral you have. I will try to write a code for that so you guys can use it if you are interested. But basically, we'll say, hey, if I double down every time I go and I'm betting we never cross this purple line, how many times I can go down, right? Maybe 3. So you're sizing your positions based on that, right? With understanding that you are doubling every time. And so you can come up with an ideal amount that will not basically liquidate you. So you borrow 2 pair or something, right? Like a small quantity, making sure that you have enough where even the worst case scenario you don't get liquidated. And then when it goes up and you say, when it crosses the next line, I'm going to sell. And you can make a ton of money by doing that.
When you say,
that
hey,
is
Gio,
one approach. Yeah.
yeah, sorry to interrupt you. I just want to clarify. When you say 2 pair, 10 pair, you're talking like leverage, like 2x, 10x?
Yeah, because the futures allow to do some leverage. I usually do 2 because it's you have a little bit of room there where you don't have to get enormous changes in the price because now you have 2. But at the same time, it's very, very difficult to get liquidated with 2. In particular, if you do this kind of rationing and you say probably the price is not going to cross this line. How much collateral I need to have, to do these moves, so you can size properly. The entire idea is to come up with the right size. Should I do it with $5,000, $2,000, some small amount where you can still make some cash? Like I say, I made $8,000 in 1 month and a half. It is with a small portion of my holding, and I can easily make 10 pair. I was just testing it, and it was incredible because now I can buy Bitcoin with it, with that money, just by using the money that is sitting in my account and not selling it. I'm just borrowing against it. And you can change because you can use both USDT and Bitcoin. So as you go up, you can change your balance, in terms of how much Bitcoin you have versus USDT, and going more and more to USDT as we come up, and the bottom, right? So you make money 2 ways by doing these future things and by rebalancing your portfolio. But again, it's not something that I suggest everybody to do. It's just one possibility, like among the other possibility. The entire idea is, look, unless you're sitting on 5,000 Bitcoin and then you don't care, right? Who cares? If your Bitcoin goes up, maybe you're selling a little bit, maybe not. You just, right? You are probably in a place where you don't care anymore. You probably want to amplify your Bitcoins, right? Because not everybody will be able to retire on their Bitcoins unless you do things like this, because all these stupid videos they say, "Oh, retire with 0.1 Bitcoin," are ridiculous. They don't mean anything. It's telling lies to people. So you want to. The entire idea is that Bitcoin is both a very safe investment, and at the same time has a lot of volatility that you don't find in other assets, and you want to use both of them. So this is one of the ideas that you can use, and this indicator is very good because it shows there are these levels where basically are like support, resistance. So you can use them to do exactly what I'm describing. Now, another application, if you do simple DCA, that is, like just spot DCA, where every month you buy a little bit of Bitcoin you look at a chart and you put your money aside because maybe you get paid every 2 weeks or whatever, you still put your money aside, but you wait for a good opportunity to buy, right? Whenever you have one of these dips. The problem with that, you could, the price could go up on you, right? Let's say that you wanted, you're here and you wanted to wait to go even further down, well, it's going up, right? But, there are other
Would you
ways
say,
of determining
hey,
that.
Gio, would you say, obviously that's looking at the indicator when you're near it, we're floating above it now. So would you say, knowing that, and I know you got the spiral clock, 9 o'clock is kind of where the real bull market starts. In the
Right.
current position you're in, would you agree that, okay, trying to time it right now is probably not worth it? It's more of, hey, you should probably get in because the opportunity of missing the upside is a lot greater than, a downside right now. Would you agree with that or no?
Exactly. So this was what I was going to say next. That there are period of times where it's more difficult to do this swing. Now, the future stuff that I was mentioning, you can do it anytime because
Mhm.
every time you go down, you have a correction, etc. Because you're not selling your capital, you're just doing the future. But in terms of buying spot and trying to wait until we have a correction, I will not do it right now because these are really the most critical times where we are in these transitions between one regime to the other, right? Because right now in theory, we are supposed to be very, very close to the support line. We are not, and mostly because we were pushed there by the ETFs. And so I will not do much. I will stay put. Now, one way of thinking, if it is still a good opportunity to buy, well, there are two ways. One is say, listen, anything that is, given that you are predicting 200,000, anything that is not 200,000, it's a good opportunity. And you will not be wrong.
Right. Yeah.
You will not be wrong. The other one is we are predicting we are going down. Once we reach the top, we are going down all the way, right? It is going to be in January of the end of the year of 2026. We are predicting we go down to close to 70,000, so something like that, right?
Mhm.
And so again, anything close to 70,000 is probably a good price because this is what we are going to revisit in basically 2 years right now. And so it's like you're buying ahead of time. That is
Right.
another way of thinking, you're buying ahead of time.
Yeah, it's
2 years
crazy.
from now.
It's crazy.
So
How do you feel about the election? And we're in a very obviously pretty volatile time here. Election is right around the corner. Would you wait to see the outcome of that if you were going to deploy more capital just to see? Because who the hell knows what
right.
happens? So we can get into civil war here if
Yes.
things happen. Who the hell knows?
My general idea is that elections and other political events don't influence the price over a long time
Right.
because
Right. Yeah.
I think Bitcoin is on board and is on, the power law does who cares, and is going to continue to do his own thing. But locally, yes, they can, right? And in
Right.
particular, this one that seems like so much emotions. People are, it's associated with so much emotions, with so much, probably even policies, right? Because there'll be different, very, very different policies, in particular, impacting Bitcoin, etc. I don't want to put so much, I don't think over the long period of time, it doesn't matter if it is one candidate or the other. Bitcoin is too powerful. It doesn't depend on these people.
Right.
And
Yeah. This
how
is
can
all
you
short
be,
term. I'm just
how
thinking
can you
short term.
be,
Do I wait another week and a half or do
yeah.
I not? Or I don't know. I go back and forth.
It depends where you think the election is going. Like many people think, mostly because of FOMO, that if Trump wins, the price will shoot up. I think if it does, it will be temporary. It's not based on any real fundamental, but the price could shoot up. But if you're thinking the other way around, then maybe the price gets collapsed for a little while. So it's a bet, and I'm not interested in playing that bet right now
Yeah.
because it's too up in the air, and these two unrelated directly to Bitcoin. I will say in general, the best advice in a situation like this will be stay put,
Yeah.
And unless there is some real data from the, from the Bitcoin data itself, where there is like a major correction, and then it will be a good opportunity to buy. And again, you can use these kind of levels to decide, okay, if we go right now, this level, it's about 57, right? Something like that. Let's say we have a major correction to 57 again, it would be a good place where to buy, because this line forms kind of a natural support line,
Yeah.
So
Have you
you see how it was following here for a long time. It's
Right.
really cool because I don't like usually this thing like support, resistance. They seem very arbitrary. But I think if somebody draws it by hand, it becomes arbitrary, right? But if a pattern seems to follow that precise trend, then it's something to pay attention, right? So if probably if the price goes there,
Mhm.
you can consider that kind of a support line, then you can buy again,
What's the price at that line on your
That
chart
line
there?
right now, it's 56, but it's projecting it so you can look at the price at any particular point, maybe after the election.
Yeah.
Let's say if it goes after the election, when the election is 5 of November, 5
Yep.
of November, it's going to be close to 56, something like that, 56,543. Yeah, 56,000, right? So if it goes there, it will be a very good place where to buy. So it's
Yeah. I don't know if we're going there. We're over 70,000 right now. Yeah.
Probably not.
Yeah.
But I'm sure there are a lot of open orders waiting to go there. Seems like a natural place. Now, another
Yeah.
one is this one, right? The yellow line itself, and the yellow line is more like 66, something like that.
Yeah. I got one more question. Thanks for all the answers, Jerry. I really appreciate your info on this. The other question, I know, you have this awesome power law you discovered here that tells us long term, hopefully projects out and keeps doing what we hope it does. But we always get this 1 year downturn. And, obviously we think it's going to go down to like 69, 70,000 on the downside.
Yeah.
But on that year, right, like shorting or doing some kind of futures in Bitcoin, to me is pretty risky, aggressive, because we know the power of Bitcoin, we know where it's going. So if you get on the wrong side of that, you can really get burned. Have you looked at some of these other altcoins, these shit coins that can be played on a downside that they're going to go out, they're going to probably go to zero. So there's really very, very little risk, but a tremendous amount of money can be made on a downside. Have you or anybody or looked into anything like that? Because everybody looks at the upside, but man, when that thing turns down, I mean, they get wiped out. And
Right.
I just
Yeah,
don't
so
know
that
of
is
any.
another play that I'm not against any play, but can multiply your Bitcoin. And again, my suggestion is always take a small percentage of your holdings and then do more aggressive things like that, right?
Yeah.
Because at the worst, you just lose a small little portion. At the best, you can, right? It's always risk versus upside, right? Risk versus reward. I have bought shit coins for the equivalent of a Bitcoin in 2017, and it was not much, it was a few $1,000, and made $500,000, So there are times where you get, and that was not just luck because I knew that coin in particular because it was like an influencer. I was calling it the he was like the top influencer of that time. Everybody was following this guy, and this guy was talking about this mysterious coin, that he was going to reveal. And I knew the moment this coin is going to be revealed, like he was keeping it a secret, And then the moment this coin is going to be revealed, everybody's going to buy it, and it's going crazy. So I was already planning for that. I say, I was watching this guy every single day. You can do stuff like that. You will have to look at the space, see which coins are like that. I mean, one can do all that research. we can try to do some of that. Is the problem is that I am kind of overwhelmed by so many things, but it's
Yeah, you
somebody
got a lot
that
going on.
we have a channel where we do all the shitcoin discussion because we say let's keep it in that channel so you can visit which channel is called. But it's not second best, but this is how that channel is called. And by the way, everybody, hopefully you see all the channels because we have some problems with, in particular, older people. I think all the new people should be able to see it. I see mostly new people. But if you have a problem with the channel, you just go under, the top and you click under, the banner basically. You click and then if you scroll down, you should see something that says see show all channels. Okay, I can let me take a snapshot of that. This mostly apply, but double check even if you are new, because I want to make sure everybody is being able to see. I'm clicking on the banner, and then I see these, and there is like a little icon, a little checkbox that says show all channels. So make sure that box is checked because we have a lot of channels and sometimes people don't see. So everybody should double check that whenever you have a chance. But yeah, so in that channel we have shit coins, discussions. So if you like to go to that channel and talk about this approach, we can. It's something that I do check all the time, all the different coins, and we can. By the way, a friend of mine that is also a physicist, we did a video together. We are going to do more stuff together. Going to have him also coming to the channel and helping us with some discussions. But he has something called Lab Crypto. He's a very, very smart guy, physicist. He got his PhD from University of London, but this really, really good university. And he dedicated himself completely to crypto. Basically, he's doing what I'm doing. He's using physics and math to understand Bitcoin. And he was showing me the other day that if you take all the shit coins and you put them together, they form a power law. And in fact, it's a power law a little bit faster than Bitcoin itself as a whole, like single individual ones. There are no other, beside some discussion about Castle, maybe follow for some time a power law. We are not sure if it is broken or not, but the entire ecosystem follows a power law. That is crazy. So there is something we can do that, right? Now, in general, to comment about what you say, I think the pattern is clear. Once we are reaching this top, we are overextended with liquidity because I'm still keeping an eye on the liquidity, but usually when we are going to a liquidity chart, you will see we are missing liquidity when we're reaching these tops. It's a very clear sign. So you have the timing, the liquidity, all the other indicators, they go crazy. They say we should crash. It's not a bad idea to start to do things like, maybe short MicroStrategy. You don't want to short Bitcoin, short MicroStrategy. Use futures. You don't want to sell your Bitcoin, short futures. Like you can short futures. That is one of the good things, right? Again, it will have to like borrow. It's almost like a insurance. You're again without crazy leverage. You do a two-pair leverage. You buy some futures. Shorting. You short, and if the price goes down, you start to make money as the price goes down, and it's overcompensating actually your losses in Bitcoin because you have a little leverage. If the price starts to go up crazy, it's a small portion of your assets, right? It's just in addition to what you're already doing, and it's all about of how do you feel, right? You want to be aggressive, you want to be less aggressive. To be honest, if I start to see that we are repeating the cycle almost to a dot, I'm going to be relatively aggressive when we are going down there because it's 1 year opportunity where basically you can make as much money as we went up, So it's something that, again, do it, don't do anything degen, assume that, whatever little portion you're doing these aggressive things, you're going to lose it. But at the same time, the upside are so much that you could multiply your Bitcoin. And you're doing it with awareness, you're doing it with being careful. I think you're going to be okay. But it's one opportunity where when we go down, there in general, my position is that the idea that is going to, all of a sudden, while we are going down, the price is going to explode and turn around, it's very unlikely. If anything like that happens, again, I don't think it's going to happen. Like these gold candles where people talk about and so on. If it is going to happen, it's going to happen at the bottom, in a more neutral place, never when the market is exhausted. We went so up because it's a very coordinated effort, right? To make the market crash like that while everybody else wants it to push it even higher. It's a coordinated effort, and there is a lot of evidence. We have data from on-chain which shows the long-term holders are the one that push the price down. They are done. They are planning ahead. Like right now, they are planning when we are going to do it. It's timed with other liquidity cycles. It's a very coordinated action. And so this coordinated action, you will not have actors that say, hey, let me do something crazy while everybody else is selling. It's not going to happen. It's very unlikely, very, very unlikely. I'm telling you what I'm thinking, telling you the information I have, and then, of course, like always, you make your own decisions.
No, I appreciate all the feedback. The support that you calculate in your power law, is that correlated to the cost to mine Bitcoin at all? Is there any correlation between the two?
Yeah. We are. I don't know if you saw recent post, but exactly that, right? In fact, I'm going to put in the chat one of the recent charts. I did that kind of work myself, but there are few people that I really respect and admire in the analyst world because they don't follow scientific approaches, right? It's all made up. But this guy, I like this guy. And I think, you can actually, if you don't follow him, follow him. He's really good. And we don't always agree 100%, but many things we do. And I did something before. It's one of the things we don't agree, for example, is coming up with a value for how much it costs to pay for electricity. And to me, that is it's not worthwhile because the price can be arbitrary. Are you doing it solar? Are you doing it hydroelectric?
Right, that's what I was wondering. Yeah,
How do
that's
you
what I was
do it?
wondering how you calculate because some have free
It's going to
electric.
be it's going to be some kind of a constant, right? It's going to be some kind of function, and probably it's also changing in time, right? It doesn't have to be necessarily a constant. Hash rate is really the best thing, and if you plot hash rate by itself, because hash rate you can measure it, it's there, right? We call it in physics unobservable. Then you will get a very, very similar curve. Like if you just do the relationship between hash rate and price, you're going to get these exact, maybe a little bit shifted at points. So coming up with a price for electricity kind of adjusts a little bit this curve, but very, very similar. It's the main thing. It's hash rate. There is this very precise relationship between hash rate, which is a power law, and then you're going to see that when you plot it, it's the cost of production, right? But it's a loop because you cannot really say the cost of production is what leads the price. So it's not hash rate that leads the price. The only place where hash rate leads is at the bottom. I actually did some studies where there is this quantity that is called Granger causality, where you can tell if you have two time series which one leads what, and everywhere else price leads hash rate. The only place where hash rate leads is the bottom. So, but it creates that support because this is where it matters, right? It matters what hash rate does at the bottom, that is basically our support, and this is where it is. Oh, you don't, I'm commenting the snapshot, but you don't see the snapshot. I'm going to share it here. So you can see it's pretty striking. I'm going to put it in the chat.
And who was the
voice
person you
chat.
said to follow, Gio? You didn't say a
Yeah,
name.
look, it's a very it's kind of great, but it's in the chart with the just posted. You see at Paul Walpole. The name is there. I if you can find it, is do you see the chart? I put it in.
Oh, yeah, I see it. Yep.
Yeah, in the chat channel of this voice channel. This, you see how cool it is? It's there. It's basically the same support line.
Oh, wow.
He's missing superimposing what we call the, that needs to be done. We should show how close it is to what we say the support line is. But, you can see, right? Just by the shape. So, this is what we think it is. That is a real power law that creates that barrier. And then everything else is basically a deviation from that. But you see, it's a loop because why that grows in that way? Addresses. So addresses is pushing the price in that way, and then the price goes up because of the addresses, and the hash rate goes up because of the price. And then, if the price goes too low, then the mining people say we are not going to sell anything. And usually that doesn't matter because of a flow, the transaction flow is much higher. But at that place where nobody wants to sell, everybody's exhausted, or if they had anything to sell, they sold before because they were scared, etc. So it's very critical. So the only people that really could sell are the miners, and they don't want to sell. So it creates a barrier. It's really cool. See, the beauty of this theory that we have is so consistent. Everything is like little pieces of a puzzle that come together and they make complete sense. It's the most powerful way of understanding Bitcoin. It almost answers everything.
Yeah.
So anyway, let's move on because we have so many other indicators to cover. So I'm going to turn off this one, and I'm going to turn on this one. So the main difference between this is what we call the band, the power law bands, while that one had adaptive calculations of a slope. This one it uses a fixed one. So sometimes maybe you want to see a simpler chart with one single line represent the power law with this middle one. You can always change the thickness of these lines. You can change the look of it. By the way, Saving Phase posts all the time about different modes that it comes up in terms of the look, etc. They look fantastic. So follow Saving Phase is in our channel. It's one of the mods. So it's very cool. And so we basically we have a full model. We have a main line. We have a support line. We have a line that is above it. Kind of you can use as a reference. Like I say, there is no an equivalent of a support line over there. There are some people, and it's something that we can add if people are interested. You could, other influencers or other analysts basically modify the decay that I'm already using, but they made, instead of, like we do, like showing the bubble itself, we have like a channel. The channel looks cool because it makes you feel there is like a region of constraint of a price. The only problem with that, it almost gives you a feeling that we can reach the top of that channel at any moment. And it's not true because, if you are here at the bottom, it's very unlikely we go to that top channel, but some people like it. So we can make it as an option where you can turn it on off. And it basically will look like there is this channel that touches these tops, this blue curve, but it continues, right? It continues like this. I don't know. Some people feel cool about looking at the channel. I think it's meaningless because the only place where we reach the channel is here, so we are already telling you where the price is going. But if you like the channel, we can add it uh, as one option. But yeah, so there is this line. Now, if you go under, you see, you know that there is this bolt, right, where you get different variables that you can change and modify. So, for example, there is like a moving average, which is this color-coded graph here. You can make it whatever you want. You can make it closer to the price. And it's color-coded, right? It's supposed to be red, close to the top. You can make it longer, 200 moving average. Some people like it, 200, and then it will color-code it for you. So it's one thing that you can do. In theory, we could add another moving average because, you know, there is the famous indicator called pi. It doesn't have anything to do with pi. It's kind of almost fraudulent to say that it does with pi. It's just silly. But the guy came up with two moving averages that when they cross, plus he has like a multiplier, I think. We can add that. We could add pi, the pi indicator here. You can always add it on top, but why not? We could add it here as an option that you can turn on and off. And it's just another thing. It doesn't predict anything. It tells you that we are probably in a downtrend whenever these two moving averages meet. Moving average cannot predict anything. We are always reacting to the data. But yeah, you can modify. In theory, you can modify the slope. But I will not suggest to touch any of these beside the lower and upper band. Here I put 0.4 because this is where the support line usually is. But you can modify it and change it. Now, if you click these, it will show you where the halvings are. You see the halvings just appeared. If you're not interested, you can turn it off. And it has also liquidity. So you see all these lines are liquidity levels. So the purple lines are where people are putting orders, like large orders. Usually that means if a price arrives there is a lot of liquidity. Like you see, I don't know if it is where people are aware of a power law, or maybe it's a natural place where to put it. But you see there are like relatively large values at the support line. Like if a price goes there, there'll be a lot of people willing to buy, right? And with the futures, etc. These are large positions open that are waiting for the price to go there, and then they want to buy, and usually that, because of liquidity, pushes the price up. It doesn't have to be. If the price really crashes hard, it can go through all these levels. You know, it's going to be more and more difficult going through these levels, but it can. But this is usually when you hear people saying that they get crash, right? Because we have like huge leverages, and if the price goes away too much from where we open the position, and they want it to go long, and now the price continues to go down, they get liquidated. But it's a useful thing because it's kind of telling you it's probably the price is not going to crash much lower than this, you know, because there is all this liquidity open. And similar thing above, where you will need a very solid bull run move for the price to go beyond these levels where people want to short. These are where people open very large position because they think there is no way the price goes much higher than that. If it goes, you know, it will be mostly FOMO, and then it will crash, right? And right now, for example, you can see it's about 73,000. You know, brighter the curves are, and I think you can also change how bright they are. Like you can, let's see if we can do that. They seem a little bit light style. I don't know. You can play around with it, bubbles. Maybe these. You can play around and check if you want, you can make them a little bit brighter or thicker. I don't want to waste time because we have so much to cover, but it's a cool thing. You can turn it on and off if it is distracting. You can go here and say lines, and they disappear, right? Oh, no, what is that? I think you do it from here. Yeah, you just display liquidation bubbles, display liquidation levels, yeah, and then you would not have it. If you don't want to, and you can adjust the leverage, how much leverage is a really huge position, under pair leverage. Usually these are the most degen, but you can adjust it. You will see more and more line if you change this leverage level. Okay, and if it is distracting, just turn it off. But it's one feature that is available into this indicator. Otherwise, it's very similar to the other one, so there is not much to comment. We highlight the areas where the full model is below the main model, right? The simple model in green. And usually, like the idea is that we spend 2 years along, see how it's mostly contained between the bottom and this line, right? Sometimes we go across like here, and then there is a correction. But for these 2 years, is usually the price is confined here. So it's really cool. And this is why we color code it. And then you go above. So that is another landmark for the bull run, right? Not necessarily it indicates the bull run starts there, because it could start earlier than that, but crossing the power law in a very, not just tentatively like it happened some time ago, but in a very strong way. Also, you see usually the price looking like a straight line, because that means we're in this exponential mode. If you see a straight line, it means exponential in this type of graph. So we go exponential up, everything, we are close to where we think the bull market happens. And then you see here it actually kind of corresponded, right? Because it was early. Usually this crossing happened after this. We start to go up, then we cross the power law. In this case happened before, because everything was early, probably due to COVID. COVID created a lot of liquidity. We were all these stimulus checks and whatever. People were stuck at home, and all of a sudden everybody was a trader. Do you remember the crazy period? I wish, because I was still playing with all these, and I called the bottoms in 2017, etc. But I didn't have entire picture, yet. And it would have been nice to work together as a group, but it's good we can do it now, right? But anyway, see, this is what happened, right? So this crossing of a power law, it's a very important time. It's going to confirm that we are in the right path. Okay, and this for us, let's see. Of course, it depends where you do it, but let's say if where is now, right? We are still there. The price is 85 right now. So we will have to go there, and if it happens later, it will be even higher. But it's a good landmark to know that we cross the power law. Very bullish. All right. I don't think this has anything else. These are all the features of this guy. I usually keep this open because it's the simpler one, but the other one has also cool features. So I keep them in the same chart. I turn one or the other off. So it's kind of suggests you to get this set up because it's very cool. You can see all the. And by the way, if you don't have a paid subscription, you will not be able to open 4 of them because you have to have a TradingView pay subscription. I think it's worthwhile to pay whatever that is. It's not a lot of money, and but you don't have to. But you will need to have. You cannot open 2 charts, more than 2 charts at once. All right, let's go to the next one. The next one is basically this indicator where we have the clock, and by the way, you should be able to see I can show you different versions of a clock, but yeah, let's see if I can find one. Okay. And by the way, this is the log version of a power law. You have to come up with tricks to do that, like you create like a chart with a fake x-axis, and then you can do it because it's not natural for TradingView to use logs in the x-axis. It doesn't have an option, so you have to come up with tricks. But it looks cool as a chart, like to see the straight line. Anyway, yeah, and this is the clock, right? So we have this clock where the price seems to go around, basically what is called a polar chart. And so you can look at all the different components of the cycles, 12. So we have this. So this chart was not created, the idea of using this chart is something that is done in science all the time. Like if you want to show something periodic, you can always plot it in this way. Let's say you wanted to see temperature, seasonality, right? This will be a perfect way. The radius will represent the temperature. The going around the circle will be like a clock, right? Where an angle represents time, right? In that kind of a clock, if it was yearly seasonality, every 90 degree would represent a season, right? So basically 3 months. In this case, we are representing the year as a cycle. 4 years as a cycle, because that is the natural time in Bitcoin, the natural time frame. So one entire turn represents 4 years. And so 90 degree is 1 year, right? 1 year here, 1 year here. And we modify, so this analyst is called Rational Root. He was the first one plotting Bitcoin in this way, so he gets the credit for that. But we modified it a little bit where we added, first of all, we added the power laws, so the 2 different power laws. The blue line here will be the full model. You see how the full model catches this top, catches this top, catches that top, and then also catches the bottom, right here, all the bottoms. So the blue line, it basically shows the regularity that you see in the white, that is the price, is due to the power law. And when you plot, there's such a thing called the power law spiral. It is basically something that grows like a power law, and now you put it in a chart like this, it looks like a spiral. And this is why Bitcoin looks like a spiral, because it's a power law that Rational Root didn't know. You wonder, oh, it looks so natural, so regular. Why it looks regular? Because it's a power law. And this is what we are trying to show here in this graph. You really closely follow the power law. And you have this little game where you see how during bull markets, you can even color code it, like we can shade in between. So you see how during the bull market, the blue one is on top of the red and vice versa, right? You see here, the blue line is below the red line that marks when we are at the bottom. So we kind of crisscross each other every time. In fact, you can almost mark it. You see here, there is a crisscross here, crisscross. Is when the bear market starts, when there is this crisscrossing, and vice versa, right? It's not like we want to think that the bull market starts at 9. So 12 is the top of the cycle. This is 3 when you have the bottom. 6 is kind of a transition, from this region where the real bear market is only this year here. But you can think, this first year after we reach the bottom is we are still going up, but you can think that this like early bull market, because basically we have 3 years of bull market and 1 year of bear market. So it's a transition that happens. Nothing really special happens. It's just usually what happens is that all the different halving happen in this area. And the reason why we are not perfectly aligned is because of the blocks. The blocks they happen have their own, they are supposed to last 10 minutes, but sometimes they are a little bit longer, sometimes a little bit shorter. So it's in Bitcoin internal clock, but it doesn't perfectly align with the human clock. And here we are using Bitcoin periodicity, but expressed in human time. And so this is why these bubbles here are all these little circles are the halvings, where the halvings happening. But it's really cool. We are here right now. So if this is 9, we are. I should put actually something here to show the real time. Let's say it's 8:40 or something like that, 8:45. So we are coming closer and closer to 9, where the real frenzy bulls should start. So because there is a circle, and again, it's really cool to have TradingView creating. Somebody show me because this was created by this company called Luxalgo for us, but I'm kind of in awe how they did it. But somebody show me the trick, so I'm going to do it soon, and then this will be another indicator that everybody can access in the group. We're going to add it to our list. But if I go back here, we try to kind of include the clock, but now in a way that you can actually compare it, right, with this chart. And the way we did it, so going back to that clock, imagine I project the shadow of this ant that is here along the y-axis, right, what is called the sine, if you remember from high school, right? If you project the shadow, right, imagine there is light here, you're going to have a shadow. This shadow is going to be very long here, right? This will be a negative shadow, if that means anything, right? But it's convention, right? You make a sign negative when you are in this region, and positive when it's in this region. But this will be the longest, right? When the sign is 1, and then this will be the full price. Then anywhere else is multiplied by a factor, right? And when you are in this region, you don't have shadow at all, right? It's 0. And you go around. So it's a way of representing something circular in a linear fashion, right? By basically a sine wave. So this is what we are trying to do here. And you're saying, wait a second, a sine wave should go negative. Yeah, and I thought about that. I thought if I show it's going negative, people say, but why the price is negative? Because here basically this is the log of the price. So if it is 1, it's 10, 100, 1,000, 4,000, number of zeros that you have on the y-axis. People will go crazy and say, what is happening? Why is negative? And so kind of I flip it and I take just the positive part of the sine wave. So it looks like bumps, right? It is kind of cool because at the intersection here, when you see these critical places, the only problem with this, here all the time people seeing this bump here and say, oh, we reach a peak. No, it's the bottom of that sine wave. It is basically this transition. So it kind of marks 1 year from the bottom. This is what this 6 represents. It's the least significant of these events. 12. So when I say top, by convention, we simply take the end of that year. So it's kind of, you can think about the top region, the bottom region, the transition. So these are all regions in time. It's just telling you we're approaching the top region. Probably the real top is going to be a little bit early. You see, you can actually identify again, because if you see these are 2 lines, these faint lines, and like for example, Semiface makes them much nicer in one of his rendition of this, but where it looks better. You can follow some of his modes, but you see here the orange one. Guess what? This is the full mode, right? Because the full model tries to come close to the top, right? And you can see it. You can also use it as a way to tell where the top is, because it crosses up and it crosses down. That is the top, right? It's not exactly the top, but close enough. It's just a way of identify where the top is. So this is the full model, the orange one, and notice it's above the simple model. And when we are in a bear place, like again, we still go up according to the power law, but basically when we are close to the bottom, it's the other way around, where the full model is above. Because remember what the simple model is above, the full model is above. Remember what the full model tries to do is trying both to catch the tops and the bottom. So it's going to adapt to do that. In a sense, the red line doesn't change, and the other one is simply going above and below, above and below. So this is where the bottom here. Again, think about the region. It happened slightly before. It's just a way of determining what is the time of a cycle, right? So it has a lot of cool information. And the color coding here. So before it was about deviations from the trend. Here is how close we are to the different times, right? So rather it is closer we are to the end of this area, right? Area, top area. Yellowish it's the bottom. Orange is this transition here. Orange to red is the full bull market. I think one of the most critical, so the most criticals are these three ones, right? This one is not so much, but yeah, really cool is when we transition from, we go really supposedly crazy when we go at 9, and you can see the beauty of doing it through formalize that you can project it, and it's supposed to be here. So you can see when that happens. And it's basically the end of this year. Is it November, mid of November? Is it after the election? Are we already in it? We don't know, but it's going to be clearer and clearer. But basically, we are close to this region, right? That is what matters. We are within the realm of possibility, because there is always a plus or minus 1 month on all these things. It's never like perfect. Okay, so this is what this guy is supposed to do. Then we have this one that are basically deviations from the trend. So this is what allow us to identify even better the cycles, because in one end the power law doesn't tell us anything about the trends. At the same time, it does, because you can take it as a reference and then calculate all the deviations from the power law, and that is what creates an oscillator and identify the different events, right? And so this oscillator here, what we call the adaptive oscillators, if you click on the bolt, it has many different options. And so a different way of calculating the deviation. You can do it price minus trend over trend, right? So you can basically take in the difference between the price and the trend, and then it express it in terms of a trend. If you click on that, you're going to see these. You're going to see these early bubbles being extremely huge. So from a practical point of view, I think this is the least useful of the ways of creating these oscillators, unless you're in, kind of one for curiosity or pedagogical reason or historical reason. You're curious to see how huge these bubbles were in relatively to the ones we had recently, right? Like this one, for example, one was 1,500%, so basically 15 times larger than the trend. So it was enormous, right? Then this one went down a little bit, 11 times instead of 15 times. This one was 5 times. The last one was more like, if you go here, was only not even 2, 182%. And the next one will be smaller. I've calculated it is going to be 80% deviation from the trend. So when we're going to have this bubble here, is going to be 80% from the trend. That is what make us go to 200,000. How do we calculate it? Because if you plot these guys in a semi-log linear chart, right? Log linear chart, they form a straight line. And I told you many times, when you see a straight line in a log linear chart where only the log is in the y-axis, and you see a straight line, it's an exponential. So then you can measure the slope of it exponential, you can extend it in the future. And if it continues to be an exponential, see, exponential are less reliable than power laws, so it's not certain. But if it does, then we reach 200,000. This is how we calculate with 200,000 So, but this is, beside being interesting historically, let's say, it's not very useful. I do it in different way. You can divide by the price. If you divide by the price, you get a little bit more normalized. Now the tops are much more similar to each other. The problem is are a little bit flat instead of being spiky. And this is kind of a clue why we see the decay, because if you divide by price and then you get normalized, it's probably because the early tops were high because it was easier to move something that was $30 versus something that is $70,000, right? Market cap wise and everything. So this is why they look more similar to each other when you divide by price, you normalize by price. That is kind of cool. It's a hint why the bubbles are becoming smaller. But again, it's not the best way to do it. You can do it kind of a mean between the price and the trend, and it becomes a little bit kind of in between the two, is normalized, a little bit more normalized, but also it's a little bit sharper. And you can even decide the weight. To see, this is determine how much weight you're going to give to one to the other. Right now it's 50%, but if you make it 70%, it's relative to the trend. It's going to be a little bit sharper, but less normalized. But it's up to you how to control that. Then there is you can also do it through volatility, same thing, because also volatility goes down, so it helps to normalize. But the one that I really like is this one, the decay adjusted. So basically, because we have calculated the decay, it's another way to show you how regular the decay is, because look how regular these tops are. Even the first one that we say it looks like an anomaly, even the first one, it's of the same height than all the other one, right? And very, very sharp, almost surgically, you can tell where the top is, because use this reference line. We also normalize it in such a way that now we have almost like a kind of a risk indicator from 0 to 100, and we can go a little bit higher than 100, but once we cross that 100, we basically get the top almost in a surgical way. And that the fact they are so regular shows you how regular that decay is. That is strange, because you will think it's all FOMO. So how come is that regular? I don't know. Bitcoin is that weird. I don't know how to tell you. It's really true. And then same thing with the bottom, right? When you're coming, let's say, below 10, this is when you have your bottoms. With, again, almost surgically, it really can identify them very nicely. So it's a really cool indicator. I think this is probably one of our best indicators. And this again, color coded according to the deviations. You could make move, like for example, if you do DCA, you can do a weighted DCA where you get in and out of cash according to going across these levels, right? So you could technically one way could be like, I am 100% Bitcoin when I am here. Every time I go 10, it doesn't have to be 10, it could be 20, according whatever you want to do it. But every time I cross one of these lines, maybe I decrease a little bit my position in Bitcoin. I start to save this USDT. I'm not going to spend it, but I'm waiting for an opportunity. Could even be a dip where if we go back, like here, I'm going to use that additional cash that I put aside to buy, So otherwise, if I climb, I put less and less money into Bitcoin and I put everything aside and I'm waiting to go back to buy more Bitcoin. Right? I want to do some back testing to test what is the optimal approach for this, but it's something that you can use this for. Now, let's move to the next one. This one is called the Earth coefficient. The bottom line about this one is that I had a line here, it's disappeared because I reset it. The line should be programmatic instead of me drawing it. But for now, you can draw a line across 0.5. And this is how you use this indicator because it's basically measuring the fractal property of Bitcoin. And it tends to be above 0.5 when we are in the regime of trend following. So basically, it kind of indicates when this bull market starts, right? Well, more than start, we are very, very consistent. So when we start to have a consistent price up, the type of regime is called trend following. And it's detected by this indicator by highlight basically becoming bigger than 0.5. So if it is above 0.5, you can find this indicator as a free indicator, but this is specialized for Bitcoin. Nobody has this indicator. It works with the property of Bitcoin, so it's more sensitive of how Bitcoin works. And so it pinpoint, not pinpoint, but it tells you it's a confirmation that we are in a bull run because it starts to go above 0.5, it starts to get redder and redder. Then if we have a reversal, it will do the opposite. And when we are closer to the bottom, is the opposite way. The price tends to correct itself. It goes back and forth, back and forth, back and forth, because you want to stay close to that bottom. And that is called mean reverting regime. And so that value, it's below 0.5. So for example, for a while, we were below 0.5 because we were kind of following this trend of going down, but we were oscillating heavily around it. So it was more because it followed kind of a trend, but it was not the dominant signal. The dominant signal was these oscillations back and forth, back and forth. Remember when everybody was making fun of a 55,000 gang or whatever? Well, these indicators say, yeah, because we are oscillating around a mean value. So this is a very cool indicator. Right now, this notice is turning around, kind of reaching a bottom because it's a lagging indicator. The other ones are more predictive. This one is lagging behind because it's based on a moving window. I don't think there is a way of making it predictive instead of a lagging. But it's kind of a confirmation type of indicator being lagging. But right now, this is turning around. That is basically confirming, okay, we are leaving this oscillatory type of pattern. Probably we are going up. So, I'm still not committed to be trend following because I don't have enough data. But, before confirming that is trend following, it needs to turn around. So it's turning around, right? Reaching a bottom and turning up. That is bullish. And then when it crosses here, it will be even more bullish. And then it will be like this. We are confirming that we are in a bull run. So these are these 4 ones. Let me continue and then I will take all the questions at once. So there is the liquidity one. The liquidity one, if you follow other videos, but this is supposed to be a training. The way you want to use it is this, right? So the purple line is supposed to be a model of what is the fair price of Bitcoin based on liquidity, because there is a relationship between liquidity and price. It's not a simple relationship, it's much more complicated. So this more complicated the model, less reliable the model. So when something is less reliable, I'm going to let you always know. But it's good enough that it's telling us some general patterns, right? So for example, a pattern that I notice is that the purple line, that remember is the fair value based on liquidity, it's always above the white line before a bull market. And the interpretation of that is it means there is a lot of liquidity available. That makes sense, right? Because to have a bull run, you will expect to have a lot of liquidity because it's probably what drives a bull run in the first place. See how much the price was moving steadily up like this. Look at this, very regularly up, and started early on, basically just after COVID. It was above a white line, and it indicated there was a lot of liquidity available. Look at what happened. The other one, similar, right? Similar here. So it's almost like a precursor of a bull run, having this liquidity available. Same one here. Now, the only time when it didn't happen like that was this bubble, but again, like I mentioned many times, an anomaly. The price was only $30, so it could have gone up only through FOMO. You know, who knows? I think it was something associated with Mt. Gox or whatever. And so the price was pushed up only by FOMO without needing global liquidity because the market cap was nothing. So it's kind of a exception that confirms the rule, unless this cycle is an exception, you know, where we are going to have a bull run without the liquidity necessary. That is kind of a little bit worrisome because, you know, we do need it now more than ever, given that we have this enormous cap, you know. So this will be more difficult to push without the liquidity. So I don't know how to. I was for some time I was feeling good because the price was going down, the liquidity was going up, and so it seemed to want to cross there, but actually we should have already crossed. And we are not crossing because we decided to go in opposite directions. This going down. Yeah, for some time we're doing exactly what I say. I was kind of joking and say, going to do the TA things I'd say I don't like is drawing line by hand. But you know, it was mostly like a visual aid to show the pattern. And then we didn't follow the pattern anymore. Yeah, we broke the pattern and we are doing the opposite. And I don't know how to interpret that because, you know, it's not a prediction, it's more like an observation, right? Can we have a bull run without having the liquidity? I don't know what to tell. It's possible that everybody's waiting, you know, even foreign nations are waiting for the elections. And we want to make sure, you know, whatever conditions are there present. So let's see what happens after the election if we see a reversal of this, right? But I would like to see this area becoming green because then it's not just like everything that happened before, but it's comforting that everything repeats in a similar manner. But it seems to me logical that we need a lot of liquidity to go where we need to go, you know. So it's a little bit worrisome. So when there are things that don't go our way, we want to monitor, we want to open our eyes, we are trying to understand what happens, you know. And the fact that we have models is cool because it's a way of comparing what should be versus what is happening. So it's still useful even when things don't happen exactly like we want.
Hey, Gio, I got a question for you.
Yeah, sure.
Yeah, sorry to interrupt you.
No problem.
On the liquidity here, this is global liquidity, I'm assuming. Are you talking about M2?
It's actually a bunch of stuff. Like always, you can click on the bolt and it will tell you. It's all these things. You see? All these things.
Okay. Okay.
So it's M2 of United States, Europe, China, Japan, other countries, but also Bank of Japan, European Central Bank, all these stuff. So it's pretty comprehensive measure of
Okay.
liquidity. The only limitation is that they are proportionate to the money that they're moving. So if it is a small country, it's going to have a little bit less of an impact. But at the same time, it's possible that independently from the size, simply because maybe the liquidity of some small country doesn't affect at all what is going on here, so it should not be included, or should be included by giving a small weight to it. Maybe China has less influence, even if it is a ton of money, maybe has less influence. I don't know, because maybe they cannot buy Bitcoin, or they have no problems in buying Bitcoin. So it depends on, there are ways, mathematical ways of actually determining what is everybody's influence. I didn't do that yet. So I'm simply summing them together. So it's one of the limitations of this measure. But I don't think it's going to change too radically the picture. If you look at the single components by themselves, they do look like they're going down one by one. So it's not just a model problem, I think. But yeah, I want to revisit and go a little bit deeper. It's again one of these things that I'm trying to do so many things. Yeah, go ahead.
Giovanni, question. I put this in the chat. Would liquidity be altered based on ETFs being approved, like inflows happening, more money coming into Bitcoin rather than previous cycles?
Yeah, in the sense that it's more focus. It's liquidity that is more focused on Bitcoin versus just anything, right? Because when this liquidity cycle, they move literally money from one place to another. Whatever game we are playing, there are many interesting books on this topic. There is, Howell, the Owl the Owl liquidity indicator. By the way, I probably reset this chart. I was plotting the Owl liquidity indicator too, and it disappeared. But I'm going to make it part of a chart. Like he has this indicator. I don't know how to calculate the indicator, but I know how to reproduce the final result. It is this curve that he has, like basically 65 months. But he has a book called Liquidity Wars or Capital Wars, something like that. I will post it in the Discord channel. He's like an expert. I think he actually is one of the people that invented the term itself. And he has they have their own way of calculating it. But they just move money around. They have their own reasons why to do that. And so we buy gold, we buy different things, right? And it's a good question, because basically almost you're hinting at, well, in the case of ETFs, is a lot of money that is moving and is focused on Bitcoin. Yeah, and this is why, for example, you see here, we added this bull run, right, where it was this injection of cash, because we had to create the ETF in the same, in the first place. So we put a lot of money in a very quick amount of time. Plus there was a lot of FOMO, and we had like a mini bull run, right? We reached the power law and then we corrected. But exactly that, right, where I think it's still not enough. And I even done calculations on the side that posted online, where I calculated what is required to continue on the power law. To stay on the power law, because this is not staying, the bull run is not staying on the power law, is when we actually, for 1 year, we leave the power law, we go crazy, it's almost like I say, like it's a escape valve, right? You go and have fun in Cancun with your friends and get wasted, and then, okay, you got it out of the system, you come back and focus back on school. Some people live like if they are in Cancun all the time, and then we lose everything. But yeah, in that case, you see, we had a bull run, but then it needed to correct because we didn't have a fundamental. So when I did the calculation, it turned out we needed, just to stay on the power law, something close to 200 million every single day, 200 million inflow. that if you take the average, also because remember, it was this sudden injection, then kind of stabilizes the, if you look at the curve of the inflow. By the way, that is another model I want to do, like something. I started here, I have this indicator where is it? Here, this one, where I'm looking at inflow. Forget about this sell buy, was just a testing to see where the money comes in and out. But I'm going to make a nice model that considers ETF inflow. That will be something I'm working on. These are the inflows from the ETFs. Yeah, so it's something to consider. Is for sure money coming in the system, but my point is, it's nothing in comparison with the huge amount that come in when we have these liquidity cycles. This is why we go exponential for 1 year, and it's not enough to make deviate. So you can do it temporarily, mostly because it was a very special situation. The ETF started, they injected a lot of money, there was FOMO, but then it was a correction. And so it's for sure going to be part of the picture, but not enough to leave a power law pattern. Because, just the calculations show, I think we are more close to 50 in average, 50 million per day, even including even this crazy injection in the beginning. So probably as time passes by, the inflow from ETFs are not going to be, because that amount grows, right? In 3 years from now, it's going to be 500,000. 6 years, it's going to be $1 billion. I don't see ETFs putting $1 billion per day, every single day, even in 4 or 5 years from now. It's going to be just one of the things that is needed to continue on the power law path. It's not something that makes it deviate. At least that is my interpretation. It needs to be understood better, but right now, that is my understanding. That is not enough. We need really this huge, big player to create these bull runs. So this is kind of a little bit worrisome. The price is still up. Yes, the ETF are playing a role. I'm not sure they can sustain the bull run all the way to $100,000, but we are watching, right? That is what we do when we don't understand something. We collect more data and we are trying to understand what is going on. But it's still useful because it still gives you some measure. Notice one of the things that happened in the past when, see, this picture makes much more sense. Like, okay, we had liquidity, we arrive here, we continue to go up, and about almost like from, okay, what was here? It was like December. Okay, this was this bubble, but let's look at this one, right? So we started to have problems with this other run here. It was in August, and then around November we had a crash, right? So it's kind of an early warning system that tell us we are going in a place where it's basically a house of cards, it's going to crash at any moment. And it's cool that it tell us months ahead because, again, we can prepare and we can do action, etc. But usually all these tops, you see, it's almost like a definition of a bubble. They are characterized by lack of liquidity. So it's another way of understanding what, the usefulness of this indicator. So every single time we had red region at the very, very top of these bubbles. So, but again, we will have to see, is this time different? It seems weird, right? That is the only thing that so far worries me a little bit because everything else is pointing to a very bullish behavior. Okay, there is this other one. This is also cool. The way you want to use this one is this. Okay, so what represents? First of all, it represents returns. So return is the price today over the price yesterday, right? So if you get one means neutral, right? Either go up or down. If it is below one, you're losing money. If it is above one, you're making money. And it tells you how much, right? Because the way you read it, if it is 1.1, that will mean 10%. 1.01, that will mean 1%. 0.99 means you're losing 1%, and so on. Okay. And so you can convert these returns that are expressed as fractions, right? The ratio between the price today over the price yesterday into percentage. And they draw here some line, right? The yellow one represent 1, basically the reference, like 0 returns, 0 gains. I draw the blue line that represent what if we just stay all the time on the power law, what will be the average gain? And see, if you go back in time, that line, you see how it's now parallel to these ones. These ones are constant gains. But the blue line, you see how it's not constant because it's changing and it's going. It's very clear how crazily high was in the beginning. You know, like even in 10, we were making about close to 1% a day. That is absurd, actually even higher if you go further enough. It doesn't go all the way because it takes time. It's calculated over a moving average. Again, you can control the moving average by this. That tells you how long, in this case, is over 2 months, 60 days. And it controls both the white line and the blue line because it's trying to compare the blue line. The blue line is a power law, a theoretical power law. And you see, this is another way that you can confirm yourself that the power law is not just some silly line across the price, but it's a deep property, statistical property of Bitcoin, because you see it's what this white line represents is of the averages of the returns over the period 60 days, and you see how it oscillates around the blue line. So basically the blue line represents kind of an average of expected return if we were just moving along the power law, and the real ones, because of course they change according to the bubble. All these peaks are related to the, let me see if I could shift this one. They are related to, see, this is when we had a bubble. This is when we had a mini bubble over there. When we had a bubble, right? All these peaks corresponds to bubbles. And same thing with the low component when we had a bottom, and so on. So the real price will follow these oscillations, but see they oscillate along the blue line, that represents the average return due to the power law. That return today is close to 0.1% a day. If you compound that over a year, you get something close to 46%. The cool thing of expressing the numbers in this way is that you can take that number. So I can write it in the chat. So let's say you wanted to know what is the compounded, right? So if you do 1.001, that will be 0.1%. When you take, if you want to do a month, you will take the power of 30. If you want to, we can do that. I can show you very quickly. Okay, so let's do the compounded over a month. So right, you can do it on your calculator if you want. You take the number expressed as a ratio, so 1.001, and you take the power of 30. Okay, in a moment to show you how it looks like. Okay, and I get 1.03. Okay, you can try to do it yourself. If you use small amount of time, it's going to be almost like multiplying that 0.1 by 30. But if you do it over a longer period of time, okay, if you do it 1.001 over a year, so you take the power of 365, because it's basically 1.001 times 1.001 times 1.001, and you do it 365, right? That means you're taking the power of 365. That is another useful thing about taking powers. So I invite you to do it on a calculator. Try to do that over 365. So 3% a month is what we do, just staying on the power law. It is still amazing, right? But if you do it over 1 year, that is 1.44. That means 44%. This is how you use this one. Imagine when we were doing 1.1, 2, what was it? In 2010, you take 30, just for curiosity, right? What do we get? 1.0, yeah, 30%, right? Close, I think, because it's not enough amount to see the crazy nonlinear effect. Bigger that number it is, more non-linear it is, right? Yeah, actually, even because it's so big, even taking the power of 30 gave us 1.43. So we were making, at that time, we were making an amount what we were making 1 year and now. And if you take the power of 365 of that quantity, just for curiosity, I know it drives you crazy, right? Yeah. All of us, 365, that you get 77, and that is not percent, that is times, right? So you will have made in 1 year 77%, 77 times in only 1 year. It's absurd. But anyway, so it's a cool measure. This is a cool indicator because now you can see where we are relatively to everything else, right? So for example, I drew this green line. It means that the Y line needs to go across that green line and stay across that line for this entire period, right? You see these blue lines that I draw, these vertical lines. That is the time that it will take for us to reach. It's basically, this will be the time that we have, because it's between, I did it between December of this year to December of next year. It's basically the window, the time window that we have to reach 200,000. So we will need to have this white line is going in the right direction. The white line is moving, and 2 months is probably the right window because you have enough data to make a meaningful average. At the same time, it's more like what is happening right now, right? It's not being influenced too much by the past behavior. So probably 2 months is the right. You can play with different one, different length of your moving average. Right now, I'm using 2 months. So if you take the average over 2 months, right now we are being like 1.003. That is kind of cool because it's kind of what we need, a little bit higher than that. We need to consistently do this type of gains, like we are doing it in the last couple of months. It has been relatively bullish, right? We need to keep going like that for an entire year to reach $200,000. This is what is required to reach $200,000. So that will mean that green line, that white line needs to stay above the green line, or hovering, or maybe going back and forth because we'll have some bad day when it needs to recover and go above. But it kind of gives us a place of reference to see if we are on the path. And usually when we go through these bubbles, we are very, very consistent. I can show you some other ones. You see how consistent we were here when we added this bubble, because basically we go exponential. When you go exponential, the compounding is very consistent. So it will be a clear sign we are going through a bubble, and see what happened when we go down. We are also consistently going down. And you can use longer period if you want it even more consistent, longer moving averages. But the entire idea will be we can track what the returns are doing as they're happening, and kind of almost extrapolate where we are going, right? Are we in the right path to reach 200,000? Are we right path to reach 400, whatever? So we can kind of take the last 2 months and compound it. So for example, if we take this, right now it looks like we are 1.003. Okay, so you take 1.0031, whatever it was, and then you compound it for 365, roughly, right, 1 year, you're going to get 3. So if we continue this path, like we're doing right now in the last couple of months, we are going to, in 1 year, we are going 3 times up. So whatever it is, right, we are 70, close to 200. They predicted 200,000, but I told you. But we need to do that consistently. So it's a game that we can do on a consistent basis. You can do it yourself, or we can do it together. We meet, when I have my market reviews, you take this value, you compound it like I just showed you, and then it gives you a feeling of where we are going. And it needs to be relatively consistent in doing that. You can take longer period if you want to extrapolate it over a longer period of time. And they did, here is what is needed to reach 500 here, this kind of compounding, and then even higher if we want to reach 1 million. But I don't think we go there. But do you have any questions about this particular one? Let's see. I will take all the question in bed, unless you have a question you want to ask verbally, and then I can answer. And then we do have a MicroStrategy one. So the way you want to use this one, basically, you first of all plot it always, instead of plotting it versus Bitcoin, you plot it versus MicroStrategy. We don't have a video yet on this one. Maybe we need to make a video on this one. But basically, open it using your symbol. Should be MicroStrategy, so you can actually see the close. The close is the blue one. Then you will be. I also plotted it. See, I added Bitcoin itself, and you can do it with using 2 y-axis, right? One for Bitcoin and one for MicroStrategy. So you can move them one against the other, like these, so you can actually compare them. So this one is supposed to be Bitcoin. This one is supposed to be MicroStrategy. And then we have 2 models, right? We have one model that represents basically the usual relationship that we observe over, since it was, see, if you go too farther away, it doesn't work anymore, right? Because it's around, I think we started to buy Bitcoin around August 20, right? So it was doing something else. Then since we started to buy Bitcoin, the market decided to kind of price it as Bitcoin, like if it was Bitcoin. And it turns out it has a little leverage by itself that is represented by the model. It's about 1.3 leverage normally. There is basically a power law. It's very difficult to say it's a power law because it's only 4 years and it's not a lot of time. It doesn't go over many orders of magnitude like Bitcoin itself. But so right now it looks like a power law. Beside this, like recently when it went crazy like that, right? So in fact, it's actually started to be valued much more than the model. If that normal relationship was holding, it should be like this one. In fact, it's already included to be a little bit higher than Bitcoin itself. Like you don't see it over a short amount of time because 1.3 is not that huge. You will need to wait, like a long period of time before you see actually a divergence between the two. But in theory, MicroStrategy is faster by itself. But since some time, it is since March of this year, it went even more bullish. It started to be even faster. and they don't know if it is something that needs to be accounted for, and so it means that the power law, it needs to be updated on a regular basis, or if it is just some kind of temporary bullish behavior, because we don't have any reference, right? We are doing the best we can with what we have. But for sure, it's crazy. This crazy behavior, it doesn't follow anything we have predicted, so this is, this will be one of the things when people say all the time, how do we know if the power law in Bitcoin continues? The problem, even something like this, if it happens during these bullish times, right? Is that the bull run, or is it a break of a power law? You don't know until the bull run is over. Once the bull run is over, if this continues to go up when we are supposed to go down, then yeah, you start to worry about being broken. But you see, in general, you can tell, right? You can tell that something is weird and it's not following the previous pattern. I always say people think that it's almost a dismissive thing. I'm actually telling you the opposite and say you will be able to see it with your eyes. I will not come up with some fancy answer. No, according to this calculation, blah blah blah. This redo. There is no way. It's such a pure thing, such a beautiful relationship. That if it is really broken, not temporarily like during the bubbles, but over the long term, we will tell. There are sophisticated ways to do it, but your eyes also will tell that something is wrong. And something is wrong with it. It would be cool if it was just doing this continuously, but my opinion about this is that unsustainable, right? It's a crazy bull that is happening before. It's possible also, maybe this is what happened with MicroStrategy is anticipating the bull of Bitcoin, and so we'll be bullish all the way for 1 year. I don't know if by the way, we could probably do the same thing where we calculate the returns. So I don't know what it is. We can roughly estimate it. I will make a post about it, what that means. Right? You see a straight line again. What does it mean? In this graph, exponential, right? Because we are working in the log linear. We are not doing log. If it was log, it will look bent up because it goes faster than the power law. But in a graph like this, a power law looks curved like this. A straight line means a power law. Means an exponential. And you can.
Hey Gio,
Yeah.
that may be like that because they have earnings coming out after the close Wednesday. Maybe there's speculation pushing it up.
Right. Exactly. And so we will have to monitor and watch it. Again, this is cool. This is why it's nice to have indicators like this, because even when they break, you can always use the normal behavior as a reference and say, okay, it's not doing what it's supposed to do. And this is a band that is supposed to be overbought, and so maybe that is where it's going to stop and then correct. We don't have a lot of information. We are learning as we go, right? This slope is higher. It's for Bitcoin, because how did they do this green line, right? First, I make a model of, I find the power law between Bitcoin and MicroStrategy. It looks like you measure the slope is 1.3, and this is what gives you this. And then you say, well, but then Bitcoin is also a function of time. So you substitute, right? And you calculate now what you substitute the equation that we have, right? Whatever it is, of time to the 5.75, and you substitute, right, in the relationship between. So basically, it will be the multiplication of 5.75 times 1.3, right? Because this, when you take the power of a power, you multiply the exponents. So if you multiply the exponents, you get something like 7.12. That is the slope of this green line. The green line is supposed to be the MicroStrategy power law. That is a super power law in comparison with the normal power law because it's steeper. And this is where the green line comes from. And again, you can use it exactly like you will use the. So, for example, you make a deviation and you get the support. It's supposed to be the support of a model. And so, whenever there is a violation of that, you can say, "Oh, that is called place where to buy a bunch of MicroStrategy because you're getting a discount, right? Every time the blue line goes below the orange one. And right now you get the opposite. You don't get the discount, so it's kind of time to sell instead of buying. But again, whatever you like to do with it, you do it. But yeah, this is how you use this one. We could with some missing things that we can add. We can add an oscillator that we don't have right now. We can take the difference, make an oscillator. Instead of making a new thing, because you have to go through this vetting period, we can add it. You can add it like underneath. So it will be an oscillator, and eventually we can also add the returns, because when you will be able to calculate, right? You will say, okay, given these returns, I extrapolate them. Where are we going? I bet this is completely insane. Exponential, like people, and I see already people making models. Say, oh, it's going to be exponential. I don't know if they did it correctly or simply assuming it's going to be exponential. But if this was true, you will make a ton of money. It's completely crazy. One way of doing it, you measure. If you want, we can quickly do it just for fun. Okay, so this was September 24, right? 6. So remember this date, 6 September, and this was October. So September to the beginning of September. So it's basically 2 months, right? Because it's almost November. So let's say 60 days. This thing is 60 days. And we went from 117. Let's do it. So this is how you will do it, right? It's something that you can do also all the time to kind of estimate these things. So you will take the price today. It is 253. So you take 253 and you divide it by whatever price was 2 months ago. It was 116. So 116. Okay. So that will give you, let's see what it is, 2.18, right? And then you do the opposite of what we did before. Now it's such a short period that you could simply divide by 60. You first subtract 1 and then divide by 60. But one thing you can do, you take, you take the square root of something when it is square to go back to the original number. Here we want to take 1 over. So instead of taking the power, you take 1 over, that is kind of equivalent of taking the root of 60, right? Because it's 60 days, right? 2 months. I can show you in a moment in the chat. Okay, let me show you. So the first step was to divide the prices, right? And that gives you the return over 2 months. Let me put this in the Discord channel. So that will give you the returns over 2 months. So that is 2.18. You can do it with me. Double check my calculation. And then you do this funny thing. You take the power. Remember, we were compounding before by taking the power of that number, right? The number of days, like 30 if in a month, 365 in a year. But if you want to go back and you measure the change, and now you want to know what that is in terms of daily compounding, you take 1 over 60, right? And then you take the power of that, because it will be kind of taking like the square root, but of a cubic root. We are taking the 60 root or something, and that gives us, if you do it with your calculator, give us 1.013. That is crazier than the craziest time that we had in Bitcoin. Like when we had the crazy bubble, right? We say it was 1.13, because if you combine that, even if you combine it over the next month, that gives us, so now you go back and you take that number and you take the power of whatever you like, right? So let's say a month, I take a power of 30. that will be 47%. So in a month, we are going up, if we continue along that line, so if you take 1.0, that is the marvel of compounding. So you compound that in a month, you get 1.47. So 47% up just in a month. And then if you do it over 1 year, remember how to do it, you take that, but now you raise it to 365. And that will be 111 times. Okay, if we did this for 1 year, we will get 100 times. If we go to this pace, do you think it's going to happen? Should we all buy a bunch of MicroStrategy? You get 111.5, something like that. All right, if we compound it at this rate, it's kind of crazy. It's cool, but crazy. I don't know. You are the judge. But yeah, it's cool, right? To have these tools and this way of thinking about this stuff. And this, I think this covers them all. I have a couple of more like previews. That is what we are going to be. One is the planet, because I really love astrology, and depends on the connection of the different planets, all the different lines, will tell us where. I'm kidding. Somebody show me this, because there are some people that are actually using planets to trade, and somebody did an indicator based on the planets. But this, first of all, it's really cool to watch where all the planets are relatively. This is from how it looks from the Earth, right? So the sun looks like another planet. This is how we were thinking of it in the ancient time, that the sun was a planet. And then it turned out that you switch position with this where the Earth is and this where the sun is. But what is cool about this is the code, we share the code with me, we can use it to make the clock. So this idea of drawing something in a circle, then we can use it to make the clock. So we will be able to make the clock. I didn't have time yet, but we will have a clock soon based on this. But I did this. This is probably you saw some of the posts from like a Plant C, for example. He has this quantile measurement. It's cool because basically you look at the distribution of all the events, right? How many values we had in this being, right? The value between this and this and this. And then you can use the power law to calculate where these events are, right? In which region. So this will be very rare event that are very low price, because these are the smallest values, and then you include more and more and more as you go up, at where the top is basically everything that ever happened, so the entire range of all the possible events. And so then you extend it in these bands, where basically you're saying, listen, even if we weren't crazy, because in general we see how these are much more consistent because there is with support, while the top is not, right? And it looks a little bit wiggly because it's the same principle of the adaptive one, where the one that Plan C calculates is based on all the statistic up to today, and then you basically extrapolate it in the past. That is not, I think it's not the correct way of doing it. It's one way of doing it, but this one uses the data up to that point. And it's going to be more and more similar to his as we have more and more data. But basically it's an adaptive form of the quantile. And the usefulness of this is this last line that we have basically creates like a channel, right? It doesn't have a strength of a support, but in a sense it represents something that probably we're never going to violate, because it says, listen, with the current stats, even if I include the craziness of that bubble that we had early on, we should not go higher than this, because that is that, right? And given that, see, we didn't go there last time, given that we see this decay, it's less and less unlikely that we actually go there. And for some reason, extending it gave me some problem, but I'm going to fix it. But if you go all the way to the end of the next year, where we are supposed to have the bubble, the top of the bubble, that is 500 something. So that is really the craziest possible case. That will mean it's so crazy that you can use it really as the highest possible limit. And then maybe you can take the other one. Like, for example, last time we were more like here, it is 240. Right? So you say, well, if we did as well as we did last time, then we will go there, 247. This one in between 362. So this one became less and less likely because that will mean the stats will be very similar to the best time we ever had, right? So when people talk about 1 million Bitcoin by the end of the next year, we don't know what they are talking about. It will mean that Bitcoin does something completely absurd in a very, very short amount of time. Already 500,000 is kind of in the limit of what is possible given the stats, but it will mean that we do something close to what we did in the first bubble. That is pretty unlikely. So it's a cool indicator, and we'll make it available pretty soon. It's called the Bitcoin percentile. And then I did another one. I don't know if I have it here. It's still quantile, but I have another one that is based on, I don't know, I don't have it right now. But it's based on Bayesian analysis. Oh yeah, it's here. Yeah, it's kind of similar, but it's more robust. It's really the most robust way of doing it, where basically you start with no assumption at all, not even that there is a power law at all, and it calculates what he thinks the best fitting is, and it finds the power law by itself, and then it tries. It's the most robust calculation for a power law that you can have. I need to add some bands. I don't know what bands I used here, whatever. Yeah, but it's basically assuming like nothing, and then as it adds more information, it starts to get a clearer picture. So it's actually one of the best way to do statistics. You assume whatever, right? You're assuming, okay, like the least possible case scenario, and then as you get more data, you update. Because it's okay to update. It's just that you have to do it with the correct methodology. You cannot do it by cheating, you know. But as you get more data, you get a better picture of what is going on. So it's a very, very robust way of doing it. I need to improve it. I need to add more layers, ranges, and so on. It's kind of similar to the quanta. Like, for example, you see this range here telling us what are the most, but you see how regular it is. It's really cool. Anyway, these two will be available soon. All right, we are done. Sorry if it took forever, but that's a comprehensive introduction, I think. I hope. And yeah, my pleasure. So let me see the questions, and then you can ask more questions if you like. Okay. Yeah, we already answered the liquidity. Inflow is for sure an important element, but it's nothing in comparison with these huge big movements due to global liquidities, and that is usually what is associated with the bubble. I don't see any other questions. Do you guys have any questions? Can be about anything, about the group, about whatever we do, about the indicators, about ideas about the power law.
You may want to remind everybody to check for spam and stuff like that.
Oh, yeah. So please be careful. In fact, please remind me to tell this every single time. There are people that have my picture, they have my name, with a small little variation, like a little dot or whatever. And then they contact people, in particular new people, and pretend to be me. And they usually want to make money in some way. Typical things they will say, "Oh, I have this trading system. We make you feel special, like I selected you among others because you seem active or you seem whatever, and then create like a relationship with you. You believe it's me. I'm very touched because I talked with a couple of people that were a scam. One, I don't want even to mention, lost a lot of money, unfortunately. But they usually try to sell you something like, oh, it will be, if it is now selling, it will be this particular scam was about joining some mining pool. And many times, they probably fail with 80%, 90% of the people that immediately will recognize this as a scam. There are some people among us that are a little bit less experienced, let's say like this. Maybe they are more trusty and they get really hard. So please, first of all, if you get contacted by me, the first thing you need to do is to check if we have a server in common, and it should immediately show you server in common. Second, always contact me back, going back to the server, send me back an email. Was that you, Giovanni, that contacted me that way? Because there is only one guy like me in these servers. They pretend they belong to other servers. They can take my picture. They can create. And unfortunately, Discord does very little because even if you get banned, they come back. First of all, they don't even try to really ban them. They are not very efficient. And then they come back with some other little change that is not noticed by people, like a misspelling or whatever of my name. And they still continue. And it's not just me. I belong to another, in the past, to other similar Discord group. And I was bombarded by 3, 4, 5, 6 version of whatever person was running that channel. It's not just me. There are even on X, right? There are these Fred Krueger imitators, but with only one goal. These are real professional. Some of them, like in this case, it was a real professional organization because I did some digging. I was trying to help the person. And it came out with the website we were using to basically getting all this info. Like he literally gave them the seed word of his wallet. Can you imagine? So it was really a breach of security, serious breach of security. And I don't know why he wrote down. Fortunately, this was like a secondary wallet he created, but he gave a seed of this wallet to them because of this. It basically was a case of phishing. So they told him, "Oh, join this mining pool. You will make a lot of money." They were even sending him some little coins in his wallet to make him feel that he was making a lot of money. And then you know what happened next. So please be careful, okay? Because I couldn't even sleep for a couple of days when this thing happened because I felt so bad for the guy. I feel responsible even if it is not my fault, right? I mean, there are scams like this everywhere. But it does feel bad because they use my image, they pretend to be me. This guy was even answering questions about the power law. It's disgusting. So please be careful, okay? So Saving Face is giving you some hints on things you can do to prevent this, but also in general, if somebody tells you, like me in particular, given we're discussing this, oh, do this so you can make a lot of money. If there is anything like I was describing today, it will be in a public meeting. I would share with everybody. I will make sure of it. You vet what is happening. It would not be me contacting you and asking you to do something on the side or one-to-one base. It's 100, almost for sure, a scam if that happens. Okay, so please be careful. All right. So unless you have, okay, J2 Hebert has a question. Man, one is chatting to me now. As soon as they join, yeah, report him immediately and tell him to actually you let everybody in the channel know. In fact, if you don't mind, if you want to take a snapshot and then put it in the chat, the general chat, so people know this is happening. It's good to remind everybody. Oh, okay. They piss me off so much. How long does it take to get access? I will take care of it tonight. Sorry, J2 Ever. Usually, unfortunately, it's something that I do manually. I'm going to learn how to do it automatically, but it's not trivial. But right now, it just one, so sometimes it takes a couple of days. It depends on how exhausted I am at the end of the day. But I will make sure of it tonight. Everybody gets updated. Yeah, good. It's a valid question. So I'm going to do it tonight. Everybody gets and by the way, if you are a older person, always check if there are updates, because we have these updates. And again, unfortunately, the only way I have to do it is manually, and it's really a pain for me to go through all the insiders and update everybody. It's easier if you go to the channel, and they usually tell, oh, we are going to have an update. So go, check if there are updates, and then always say all what you need to do. You don't need to rewrite your Patreon name. Just say update. This is if you are an insider, right? Because only the insiders get updates. Say update, and then you put your TV name, because I can always go and look what your TV name was, but it's easier if you write it down. So it makes easy for me. All right. Any other questions? Anybody? All right. Okay. Yeah. Maybe? No?
No, that was me. I bumped my mic.
Okay. All right. Thank you guys so much to be patient and going through this training. It's my duty, hopefully you learn something.
Learned a lot. Thanks, Gio. Appreciate your time. It was great.
Oh, my pleasure. All right. Tomorrow we have another meeting. If you want to join, we talk about the market, etc. It's not going to be too different, but if you want to come and chat, it's going to be at the same time.
Great.
All right.
Awesome.
Thank you so much. Bye, guys.
Take it easy.
Yeah, you too.